Morning, Trevor. Good morning, everybody. So CPI just came out this morning. Really, only jobless claims was higher than was expected. Everything else was kind of in line. And we've got a little bit of volatility, but well, it really depends what the market's going to do today. There's still a handful of nice looking names. Also, consider that pullbacks to moving averages have been viable for about the last few months, and that's not really changing here. At least not for now. Right, so even something like Palantir, when it got down to its 50, became viable. Right, maybe something like MP, as it's approached its 50, becomes viable. I'm not sure. Yeah, Roblox has done a nice job hanging in there. Yeah, SoFi looks good too. Again, I don't really know how the market's going to react by the open, so too hard to say. Yeah, Netflix, and this one will move with Spotify too. I'm not too quiet, guys, right? You guys can hear me well? Cool. MPWR is fine. This thing looks pretty good. No, I see no problem with MPWR. No, MP still holding the 50 simple moving average, but I did take half of it off yesterday when we were breaking prior day low. But as long as we're going to hold the 50, then I can hang out with it. What's my scanning process? I do a lot of my scanning in the evening, right after everything has happened. Right. Also, while I'm sitting at my desk, like if there's nothing to buy, or I don't really see a nice setup, or maybe I missed something, I'm not only tracking my current positions, but I'm also scanning the market for what's holding up best, what's being distributed, what new setups look good, what stocks are hitting highs, what stocks are hitting lows. Like I'm constantly trying to put pieces of the puzzle together. So when I do get to the evening, My scanning's a little bit easier, but then I just run through my scans, whether it be a 90-day, could be just a 90-day relative strength scan, could be up on volume scan, and I just go through my scans and I say, oh, okay, very nice. Home builders are acting well today. Oh, and they've got pretty nice setups going into, the end of the week or the week if they do XYZ, right? Maybe they tighten up another day or two and then they'll give me an entry. And then so back of mind, I'll have a couple of home builders on watch. I'll set my alerts, and then I'm ready for them, later in the week. But it all comes from like me being at the desk and then seeing what it is that's moving, um, and what it is that's going down. If I see a bunch of software stocks going down, I kind of know to avoid them, right? I don't like to cherry pick um, weakness, unless of course they're pulling back into ascending moving averages. Then, we might have a different conversation. Yeah, team. That was me messing with the volume on accident yesterday for some reason, but that's why I asked you guys this morning. So they should be good in the room for later. Those videos are fine. I'm not in the Market Wizards book, but I am in contact with George Coyle, who is the co-author of this current one with Jack Schwager, and George just needs me to have about another 5 years of longevity, and then maybe the next one. Fix taking off. Yeah, nice name. Looks great. Awesome earnings and sales too. I prefer to buy things on a day where the QQQ and SPY are gapping down, and then they're going back up through my key moving average. That's my favorite. I hate chasing gap ups, although I still do it from time to time, but that is my preferred. Yeah, this is still fine too, but maybe a longer base. I don't know. It is a long base. I mean, it could get going any moment. You start taking out prior day high, it looks pretty good. SYM symbiosis. This doesn't look too bad either. If it can take out yesterday's highs, it looks pretty decent as a 50 undercut and rally. Coin's got to reclaim the 50-day. If coin can't reclaim the 50-day, then it just doesn't matter. There's too many other names that look great for you to be worried about a stock living below the 50 simple moving average. TEM's cool. I don't mind the volatility that's been coming into this thing. I'd like to see price flatten out somewhere. I personally hate rising channels, and this is kind of what this feels like. I'd like to see price flatten out somewhere so I can get involved. One of the easiest ways to not be a boom and bust trader is to use progressive exposure. Yeah, I don't think your idea of like how you actually utilize progressive exposure is probably not correct, but if you use progressive exposure correctly, then that should help you not be a boom and bust trader. Also, your stock selection is probably not all that great. Progressive exposure works well if you're focused on names in good groups. Semis look strong. The problem is I look at a name like CRDO, CRDO, and we're going vertical here. $168 now. Yeah, this is they look strong, but you got to be a little bit cautious. This is a vertical for this name. Yeah, same with SNDK. Vertical. Gorgeous move. And it's not just SNDK, it's also MU. It's also STX. Yeah, I think the solars have bottomed. I don't know that this, goes all the way back. It could. Yeah, MU up 5% pre. Man, I should have bought this last Thursday, 120. I don't really like Intel. I know people keep mentioning it. I mean, it's got a beautiful high type flag. If it can kind of get going over this 2490s, $25 level, looks fine. But it's just a not special name, right? The market's been on fire for months, and this thing's been doing what since April? Flex looks like a good breakout. If you would have bought it on 822. You found AMSC from the FinViz screener? Nice name. Another one that I'm focused on is this AOI. I think IWN looks fine. Shouldn't be too long before this thing's at an all-time high, in my opinion. What are you, 8 points away, 9 points away? More than likely, we end up at an all-time high soon. Nah. Thursday the 21st? Yeah, probably. But not here. I didn't see the date you put, but yeah. Yeah, there was a setup here. Maybe better on the 22nd. You wouldn't have gotten stopped out, but that would have sucked, right? You get a nice push, and then you're watching it all come back only to keep ramping. Yeah, 21st wouldn't have been too bad. You hit your target of 21% on both ALAB and CRDO. Well, you shouldn't keep targets. That's silly. Right? You shouldn't try to guess how high a stock can go before you trim. And if it's gone up that much, I would absolutely trim personally. You can do whatever you want, but when something's gone up that much like CRDO, I wouldn't just be looking to add the first pullback. I would look to trim and then just trail, on the 20 and the 50 day effectively. If you're up 21% on CRDO, where the hell did you buy this thing? You just bought this thing a few days ago, 9.4. If I'm not going to be at the screens, I set a stop manually. You miss SanDisk by a literal penny? I don't understand. Here's the thing. If something's moving out from a base and I hear stuff like that, you miss SanDisk by a literal penny, that doesn't make any real sense to my brain. Because if you size something properly on a $50 stock, 1 cent shouldn't matter. 10 cents shouldn't matter. Right? And if you've missed it or like you still think it's going to go, take a half size position. right? What's wrong with a 5% position? What's wrong with a 8% position? Why does it got to be 10, 15, or 20, right? You take a 5, 10% position in something like SNDK and then it's up 60%. Right? You didn't need a 20% position. So, when I hear stuff like you missed it by a literal penny, then that just means you're typically oversizing your positions. Index futures actually aren't down. They're all green right now. So you need to focus more on your position sizing. I know your name is I Manage Risk, but yeah, ETHE looks pretty interesting. It's ETHU that I like a little bit more, but yeah. It's gapping up this morning. Hinge recent IPO. Yep. Well, my favorite weekly base is probably still in Tesla, but there are names like AAOI that look good. ETHU is pretty interesting. Palantir looks like it's in a continued uptrend. We'll see if I can add to some ARC. I'm trying to add more to my PDD eventually. We'll see. Yeah, eventually Rocket Lab's going to need over 51. But yeah, it looks pretty good. Man, CLS hurts to just look at. I own this name at $100. Yeah, CLS doesn't look bad. Looks pretty good, honestly. It really depends how they're acting versus the market. Like if I bought something and it's really not moving, but the market's going down, then it's showing relative strength. If I bought something and it's not moving, but the market's ripping, then it's got relative weakness. I don't want to be in names that are showing relative weakness. Concentrate your portfolio a little bit more. Go more like 10 to 15% positions then. And then look to add to names that are already working in your portfolio. That's a beautiful trade, Couch. Yeah, AAOI is beautiful. I did not add any Tesla yesterday, but I've got about a 350 average if I'm not mistaken. I have a $350.57. So we'll see. My Friday entry has all the way down to the 300 or 200 simple moving average on Tesla. I'm giving it room all the way down here. It's very simple. A 620 setup is all done on a 5-minute chart. You're looking at a daily for your key area, and then you're zooming into the 5-minute, and you're waiting for the moving averages on a 5-minute chart to cross up the 6 and the 20 EMA. Oh man, CLS was terrible. I bought Palantir originally at $100 through this flat base breakout right here on April 23rd. And I stopped out the day of earnings, unfortunately. This gap down. It was a pickup in volume, and I didn't want to see this thing drop all the way back down to my average. In fact, the 20-day, was a little bit lower, and I'm like, man, if this thing drops all the way down to 103, I was like, that's gonna suck, right? From going up 25% to only being up 3% on my position. So I just cut the last of my shares. I did trim some into the strength. I felt like, big old smarty pants for doing so. And then I felt like an even smarter guy for getting rid of the last of it, only to feel like an asshole a few days later. So, yeah, they didn't make it easy. My strategy for adding to winners is to treat it like I didn't own it. So, I was once talking to Lance about this, and Lance said something really important. He said, anytime you take a trade, right, your cost basis isn't important. He said, but if you're going to add to your position, there needs to be positive expected value. So what does that mean? It's like you have to treat it as if you didn't own it already. And if you didn't own it and your average wasn't way lower, would you be a buyer here on this next setup, right? And then when you are a buyer, right, I treat it as if I didn't own it, meaning I don't just widen out my stop because now my average is still way lower. I still treat my newest position as a new buy, and I set my stop at the low of day or prior low of day or against a key moving average like I normally do. And I size right like I normally do. So I just add to it as if I didn't own it. I like waiting a few minutes after the open. PDD is moving just very slowly. Yeah, it's kind of random. AMPX. Everybody's looking at this damn AMPX. It looks good. I don't know what this move's all about, but is there news? So by treating it like you don't own it for the ad, does this ad? Yes. So anytime I add to the position, it has a new stop loss. Like the added shares have a stop loss of low a day. When is my stop loss not low of day? When it's very tight to prior low of day. So when prior low of day was a very narrow range bar, and then I'm buying it over that prior day high, I might not be using today's low. I might be using yesterday's low. And it also depends how quickly the stock moves. Like if it's a slower name, like when you're trading like a JP Morgan or something like that, which you guys might never find yourself in that situation, then I'm using prior low of day. UMAC, PDYN. Make sure you've got some scans. Sit down at the desk in the evening and scan and go through the market. Go through what the volume movers were, go through the biggest percent gainers of the day, go through the leading groups of the day, go through your 3-month relative strength scan, go through your daily relative strength scan, go through your monthly relative strength scan. Like, just go through all of your scans. Go through your down on volume scan, go through your, your worst groups in the market. You want to know where money's going, where money's leaving. That's very important. Your end of day process should maybe take you 30 minutes to 1 hour at most. Scan through the names you like, set your alerts, try to put the puzzle together in your head, and then come to the market the next day, relook at those names, try to pair it up with a good market when you do some buying, and that's it. That's literally it. Where do we get these scans? Well, they don't sell them at the store. You got to build them. You can build them on Thinkorswim. You could get them on DeepView. You can get them on Market Surge. You can build them on FinViz. And by get them, you got to build them. You got to build them for the criteria that you're looking for. Right? If you don't know what criteria you're looking for, then that's a whole nother something else you got to tackle. I don't trade options. Normally, under most scenarios, the second you break today's low or prior day's low, I exit. Do I have a max risk that I limit myself to? Like, if a position is 1% risk, very rarely is a position 1% risk. That's a very, very tight stop loss. I don't. Now, do you mean 1% risk of the portfolio? Because that never happens either. But like, if I buy something at, $70, I don't usually have a 70-cent stop, right? Usually stop to low of day might be like $1.50, $2, or it could be prior day low, maybe $3. So it's more like a 4% stop. In which case I'll take like a, 8 to 10% position, and I've got like 0.4% risk of my portfolio. Dave, I mentioned it already. A 620 setup, you're looking at a daily time frame. Right? Okay, so here's the other day on Tesla. So a 620 setup is when price is approaching a key moving average, which it was about the 5-day, and then the 6 period starts to turn back up above the 20, and here's where your entry could be, right? With your stop at low of day, knowing that you're buying within a range, right? And it still hasn't broken out, but you're buying it against the 5 and the 10-day. And it never hit low of day, right? And all that happened was this thing ripped yesterday. Yes, it gave a bunch of it back, but, you've got your entry tactic. How many stocks should one hold if the account size is 6K? Don't look at your account size like you can only own like one name, right? Do the right thing over and over and over and over and over, and eventually your account gets bigger. Like, don't think you got to get like, these 20 and 30 and 40% positions into your portfolio just because your account's small, right? Get you like the emotion of losing $60 or $50 or $40, even when your account's only 6K, is the same as me losing more, right? It's because it's all about percentages. Stop looking at the money. Start thinking about things in terms of percentage. It's easier to stomach that way. Like, when you start thinking about, oh, my account's $6,000, how much should I have per trade? It's a percent thing, right? If I say you should have 10 to 20% of your money in a position, right? Then you know what that equals, right? That's $600 to $1,200, right? It's not, oh, I've got only 6,000. I need to risk more. It's just the opposite, really. Just think about things in terms of percentage. I don't. So I treat every single position on its own merit and for its own price action. And this is the power. So like, how much would I risk in terms of portfolio total risk on all my positions? Here's the reality. This is where progressive exposure kind of keeps you out of trouble. Like if I'm in a position and it's working well, I can go get another one. And then if that's working well, I go get another one and then another one and then another one. So the worst I ever do is I'm risking unrealized gains. If I buy, let's say I have no money invested and I buy something and then it just doesn't work, right? I take my little loss, there's like 0.3% portfolio hit. And then if I buy something else that doesn't work, I take my hit. And then if I buy something else and it doesn't work and I take my hit. Now all of a sudden I've lost 3-4 trades in a row. I might have lost about 1% of my equity, 1.2%, 1.5%, something like that. And I'm just like, okay, I'm not seeing things well, one, or the market's being choppy and unfriendly, or I'm not trading stocks in the right group. Okay, so now I really know my problems because it's always stemmed down to that. So I size down. So I go to 5% positions. And if I can't gain traction on 10%, I should assume that I probably can't gain traction on 5%. But if I start to gain traction, right, I'm either trading stocks in the right group in a good market where every bozo's making money, myself included, right? Or I'm seeing things well, or a combination of all three. Then all of a sudden, I have a 5% position that's working. I take another one, that's working. I take another one, that's working. Of the three names, a few days later, I'm able to add to one of them. The next day I come back, I can get a 10% position on because now I'm working behind some unrealized gains and some traction. And all of a sudden I start to make up for my little hole that I put myself in, very small hole that only takes one or two names to get yourself out of by holding it properly. So I think that's like a much easier way of looking at it. I'm never really risking a big chunk of my portfolio because of progressive exposure. And I think people kind of lose sight of that. Like I give back unrealized gains all the time, all the time. But like from like closing equity, right? Like realized gains, I'm never really in a huge drawdown, right? Do I give back open gains all the time? All the time, right? Where it's like, man, my portfolio was up here, but I had a bunch of trades in the green and I still treat every single position. Like once I get my money to work and it's 10% of my money, I stop babysitting that stock. My stop is in. I've already accepted the loss before I've gotten in and I just let it work, right? The job isn't to micromanage every single position I'm in. I've got the other 90% of my money I still need to get into the market, right? Once I'm in 2-3 stocks that are working and I've already got 40 to 50% of my money in the market, I don't babysit those anymore. They're all working, hence the reason that I've got 4 or 5 names on, right? Like, for instance, I don't give a shit about ARK anymore, right? I've owned it since 6.6, right? I'm not babysitting this thing anymore unless I go to add a position to it, and then I can keep a close eye on my new ad. But I'm not babysitting my like $59 cost basis. I'm not even thinking about ARK anymore. I don't get happy about it. I don't celebrate it. I don't say, ooh, ah, and oh my God, I'm making so much money. It doesn't matter. I'm focused on getting the rest of my money to work. And so, yeah, I'm risking more on the unrealized side normally than on the realized side. The scripts were built. You got to build the scripts, and now with AI, you can build them in an hour. The 6-period EMA, 6-period moving average. Thanks, DT. Appreciate you, man. What is my exit strategy when you're in a stock that work in your favor and then pulls back? Do you exit all your position on the 10 SMA like what Cool Maggie? Well, Christian holds his stock so long as they're holding the 10 and the 20. So long as they're above the 10 and the 20, he doesn't really exit. So my strategy is always this. Again, it's it varies just a little bit, but if I buy a breakout and then it goes on to push for 3 to 5 days, I trim some off into that strength. And then from there, I just trail the ascending 10 and the 20. Right? Again, we could look at ARC as an example. So ARC in this push, right? I trim some off, right? I bought it here. I'm trimming some off in here. And then at this point, I am just trailing this 10-day. Once this thing begins to pull back the way it did right in here, right? It found support on the rising 10-day. So mentally, my stop now becomes this low versus the low of the day that I bought it, right? Because the next day it was higher, right? And then I'm literally just trailing the 10 and the 20. And once price begins to pull back or pull back a little bit steeper, right? Like even this didn't bother me. Why didn't this pullback bother me? Because I'm fully trimmed. And this pullback here where it kept going higher, this, just like this, becomes my new stop mentally, right? And then you push off higher, right? I'm already trimmed on the position. I already think this thing can go higher. This little move down doesn't bother me. Let's see how it acts the next day. And immediately it starts pushing right back up, right? That's why these pullbacks didn't bother me, because each one of these subsequent pullbacks have been higher than this spot right here, right? This pullback became my new mental stop. And then this entire time, this thing's now been finding support at the rising 50. And everything has retightened just like it was getting nice and tight in here, right? A little bit sloppier, but now everything's nice and clean and a fresh new base, a whole new base. That looks a lot like the NASDAQ, right? So in my mind, if the NASDAQ's going to go on to work, then it's likely that speculative names go on to work. And it's likely that the good names that Kathy owns in her ARC ETF, like Tesla, Palantir, Hood, Roblox, those can continue to work. So if these things continue to work, I'm just going to continue to now trail the 50-day, right? And you have to that's why I trim into strength. It allows me to hold through stuff like this, right? I've already paid myself. And in fact, I paid myself lower, right? In hindsight, if I had it, I would have trimmed up here on this day it fell for the first time. Instead, I trimmed way lower, or I would have trimmed into this little bit of strength, but I didn't, right? And so now that I've trimmed lower, I can't really mess with it anymore. You just have to trail, and trailing so far it's done nothing wrong. It's done nothing right. I haven't really made any more money, but it's not doing anything wrong, and I own it from much lower. Right. So that's the key. And then I just let it work. It really depends. Like if something was tight against my stop loss level, it's a good question. Do I wait till the close to sell, or do you always put hard stops in what will hit mechanically? So if it's like early in the day and a stock is like already near my stop level and it starts to break down through it, but there's heavy volume right at the open, I just cut it, right? I just cut it. But like if you're like midday and you're kind of like, you're like it's had to fall like 3-4% just to get to my stop level, normally I'm going to give it a small little chance to bounce, which I might. And it also depends where I own it. Like the last thing I like doing is watching a nice green trade go red. That's like sacrilegious in my book. So, but if I'm already have some realized gains on it, and then, I'm like, okay, I'm going to trail the 50. But then all of a sudden, this thing breaks the 50 on this day, but by the end of the day, it reclaims. And it breaks the 50 on this day, but instantly gets bought back up. I'm being a little bit more patient because I own it from so much lower. So again, there's like caveats to that question, but like it's on a name by name basis. I think Futu was awesome near what we talked about. Futu down here in the room. This is where I liked Futu the most. 7-7 I thought was great. Obviously it had this little upper wick, so it's kind of a pain in the butt, but it ended up breaking a nice flat base the very next day. So subtle gap up and then off to the races. I think Futu looks great. Ideally, the 50 can catch up and this thing can just chop around for, a few more weeks or something. Who knows? You could. You could. But here's the thing. It's like eventually, that 0.5% risk on 60,000, becomes $300, and on 600,000, becomes $3,000. So, it eventually becomes real money in the real world, right? Like $30, you might be like, it's not that much. But I think instead of focusing on the money, think about things in terms of percentage and process, right? Like what's the percentage loss? Percent matters, right? There's going to be periods as swing traders where like you lose 10, 12 in a row, 15 in a row. That's just what happens, right? There's going to be a rough patch in the career. There always is. Now, are they easy to overcome if you recognize by the time you're on your third and your fourth and your fifth loss to size down? Yeah. And then oftentimes I've had losses that are 0.2, right? I could take 15 losses in a row and I've lost 3% of the account. Like I could live with that, right? I'll be okay. But yeah, think of things in terms of percentage. When do I go about moving my stop up to break even? After the third through the fifth day, roughly. If I can get a nice push, sometimes even by day two. Like, if I'm dealing in, like, call it ARC, right? We'll go back to ARC as an example, right? By the time we got to day three, there was no letting this thing go back and go red on me, right? If you get this kind of push and this push on volume, right? This sometimes even on day one, I'll go, man, look at the volume that just came into this thing on day one. I'm not going to let this thing go low of day stop. It shouldn't even come back to 59. I have multiple trading accounts, but I don't separate them for like long-term trading versus, there is no long-term trading. If a stock wants to be in a long-term uptrend and I can catch it, then it's a long-term trade. But I don't know that this is going to happen the day that I buy it. Right? So I don't separate my accounts for that reason. It happens all the time. Not all the time. CNC, I wouldn't even focus on this, dude. It's below a falling 200 day. A full trim could be, 30 to 50% of the position. You can set these kind of orders on, you can create them on Thinkorswim. Yeah, ARC, I'm looking to add more. Right? I don't know that I have to wait for 79, but over yesterday's highs would be pretty good. How do I control FOMO? FOMO is only for people who think that their career is going to be short. So like if you missed a trade, you're like, "Oh my god, I missed it. I knew it. I got to buy it." Like slow down, right? It's going to be a 40-year career. You don't think you're going to find more stocks that go and make awesome moves? Right? You don't think that you think like people who suffer from FOMO act as if the career is over tomorrow. Right? Like you have to make money today. That's total nonsense. FSLR is showing a bit of relative strength compared to its peers, right? Look at what FSLR is doing, effectively nothing, right? But then look at what Sedge is doing, really getting beaten up, right? Look at what EMPH is doing, right? Not really doing anything actually. And run. Again, kind of coming down. There's nothing really going wrong with these. Like, I don't think that they're broken by any means, but FSLR is probably still the favorite of the bunch. A little choppy, though. A little choppy. Do I ever use intraday stops? Yeah. Higher than the low of the day? No, not often. Yeah, stock surfing. I'm effectively live streaming in the room all day. Sometimes I try to get off a little bit earlier just for the sake of my back, but if I'm at the desk, I'm live streaming. What are 3 to 5 non-negotiable criteria a chart must meet before you even consider taking the trade? Ooh, well, there's got to be a tight spot for me to buy and manage risk, right? So that's number one. It's got to be in a top group. Doesn't have to be like the best group, but I'd like to there be a relevant theme or be in a top group. And then ideally the stock could have some earnings and sales. I won't say that's a non-negotiable because I have traded stocks that don't really have earnings and sales, but you kind of align those three things in your favor where it's got good earnings and sales, it's in a good group, and it's got a good technical setup where you can manage risk. That's like the holy trinity. That's like that's literally how you manage risk. You're trading stocks in theme, and there's a reason for institutions to buy them. They've got good earnings and sales, accelerating earnings and sales. Would I cut a trade if it doesn't go anywhere is what you meant. And I've kind of answered this. You have to think about it as, how's my stock acting versus the market? If your stock hasn't gone anywhere, but the stock market is ripping, then yeah, you probably need to exit. But if my little doggy came to say hi, but if your stock is doing nothing, if the stock market's ripping and your stock is going nowhere, your stock is showing relative weakness. If the stock market's dumping and your stock is going nowhere, then your stock is showing relative strength. Don't cut stocks that are showing relative strength so long as they're still above your cost basis, your stop loss level, etc. All right, guys. I appreciate you all for being here. I got to get my butt moving. I got stream to join. So we could talk about this. George, we'll talk about this tomorrow. Please re-ask that question. I got to get going. Much love. Thank you guys for being here. There's a ton of you guys. Awesome questions today. Probably a lot of little golden nuggets. Trade them well today, and I will see you guys bright and early tomorrow morning. Yep, later.